Hey everyone, want to give you the heads up that the Chart Guys has a new service coming out. The Chart Guys have always had goal number one of teaching people technical analysis, but we realized through feedback that takes a whole bunch of time and some people just don't have that time with their lifestyle. So we're going to be releasing a swing report that goes out on a weekly basis, and it'll be both in written and video format. And we are currently rolling that out with our members at the moment. So keep an eye out for our social media, and certainly in front of these videos I'll let you know when that swing report goes live. Essentially, the goal of the swing report is to save you time, put in a couple dozen hours every week, get this report out, and ideally help you profit. So I appreciate your support, and I will let you know when it is live for the public. Hey traders, big red day out there today, and hopefully you are all making note that the healthcare, financial, and tech sector were all dropping to new lows of the day at the same time. The last time we saw that happen, significantly, was back here on June 11th. So definitely notable in that regard today. And where we stand right now, definitely a little bit choppy in here on the daily time frame. The Bears scored a victory today. But what I care about most is this low of 29.36. We'll go over a trade review at the end of this video for a little bit more in-depth using the 15-minute, 5-minute time frame, how I cycle time frames and set up a low-risk trade. But for now, what we are looking at is high, low, lower high, found a support level, failed to break resistance, broke support with a lack of follow-through, failed to break resistance, broke support, and at the moment, it's with a lack of follow-through. That support was 30.39, and we dropped down to 30.31. So tomorrow is going to be very telling as to whether or not we get follow-through or not. Why I care about 29.36 as the most important level, look at the weekly consolidation. We are looking at this as a potential weekly bull flag. Obviously, to confirm the bull flag, we have to break 32.33 and see continuation. But this is a weekly inside bar forming. If the weekly inside bar forms over the next 2 days and breaks bullish next week, this weekly consolidation is just fine for the bulls. If we break that low, the odds of this being a weekly bull flag will significantly decrease. Again, we're talking probability needles. The burden of proof is on the bears to prove to us this is not a weekly bull flag. So unless we break that low, it's going to remain a possible weekly bull flag. Thursday, tomorrow after hours, we have the results for the banking stress test that is coming tomorrow. The market does not know what to expect. So we saw the majority of the weakness today out of the financial sector. We've been seeing that consistently over the last month, but perhaps a little bit more today because of that uncertainty after hours tomorrow. So just a heads up, watch for that volatility and active futures trading tomorrow after hours. And if you don't know what the banking stress test is, plenty of time to Google it tonight and learn something. So heading into tomorrow, what are we looking for? This is why I stopped early in my trading career doing preparation after hours. Some people have to do preparation after hours because their work life doesn't allow for pre-market. But man, pre-market is just such a more clear picture. I can say two completely different scenarios. If we bounce tonight in futures and we open tomorrow, I'm looking for a 4-hour lower high and a bearish entry. If the weakness continues after hours, 4-hour RSI will be oversold. If we gap down open on SPY tomorrow, I'm looking for a bounce. Two completely different scenarios based on what happens overnight. Do I know what's going to happen overnight? Absolutely not. So I'm going to patiently wait for that information, and then tomorrow morning, bright and early, at 6 a.m., I will make the preparation of what I'm looking for on the day. Starting today, the preparation was fairly clear. The preparation was look for an hourly lower high to be set on this bounce. Now, I did not anticipate an all-out dump in all three of our sectors, and I even didn't anticipate that we were going to drop to a lower low, but I did anticipate an hourly lower high was the most likely scenario. So knowing that most likely scenario allows you to position yourself in those bearish positions and ideally let them ride a little bit. I didn't make any bearish entries first thing this morning as I was live streaming and behind on my tickers, didn't get through answering questions until 15 minutes, 20 minutes into the trading day. And generally, I try and not trade unless it's a very clear level off a very clear support or resistance in the first 15, 20 minutes when I'm live streaming. I'm a better trader when I'm not live streaming and talking and answering questions. I've just had to accept that and adjust my trading time accordingly. That being said, I patiently waited for the bounce today to enter a bearish position, and that's the trade that I'm going to go over at the end of the day. IWM, or at the end of the video. So IWM broke its short-term support as well, just like SPY did. Certainly a little bit more bear follow-through. And again, if we look at this on the 2-day time frame, we can just condense things down a little bit more clearly. High, low, lower high, key line in the sand support, 134. Make that 133.28. If that level breaks, it is a very clear bear break. Again, weekly consolidation. Healthy for now. If that level breaks, we start to shift away from healthy. And we start tallying points in the bear column. So I like this 2-day time frame for clarity. And if the bulls hold this support level and start to bounce, we'll have a tightening 2-day range into next week. Keeping in mind that when we are not trading Friday next week. It's a shortened week because of July 4th. So we've got 6 more trading days in the next 2 weeks. QQQ. We also have the tale of 2 sectors. QQQ is just fine for the bulls. We've said this many times. Let's just run through real quick. Amazon daily chart, extremely strong. We didn't even break the low of yesterday. Apple daily chart, extremely strong. Microsoft daily chart, a bit more of a pullback, but still a very clear uptrend. Netflix, same thing. So you get the idea. There are no red flags on these tech sector names in any way, shape, or form. Netflix just formed a higher low every single day for 7 days, and we're finally topping out and consolidating, coming off the all-time high. So bulls on these major tech names are just looking for daily higher lows. And I'm having deja vu because this was the case not long ago where we saw market weakness. It was right here. So where was this? June 10th, June 11th. That was this pullback on the S&P 500. This pullback, which was massive, but that whole time, our lead tech bulls just fine. Apple, daily higher low, holding 12-period exponential support into continuation. Amazon, daily higher low, 12-period exponential support into continuation. So my point is, we've seen this before, and if we keep the daily 12-period support, if these major tech names keep their daily uptrends, we're not going to see the S&P 500 fall apart because of how much weight these tech sector names have in the S&P 500. So that's important to pay attention to. Let's just see if we set another healthy daily higher low like the last time around. It looked like the S&P 500 was falling apart. And the tech sector helped remind us, no, it's not. XLV. So out of our 3 major sectors, QQQ obviously the strongest. XLV is in the middle of the road. XLV has our high, low, lower high, and we're looking for a higher low compared to 95.42. Again, if you want to condense it down to make it a little bit more clear on the 2-day time frame, can the bulls hold this support level is a question we have over the next few days. If we do, tightening ranges into next week. And XLF is the weakest of the 3 sectors because it has already dropped to a lower low. No bear follow through. We only broke support by 5 pennies, but it's a clear bear break. So if we put up the 2-day chart here, high, low, lower high, lower low. So again, it's just like the Goldilocks and the 3 bears, too hot, too cold, just right. Lead bull, lead bear, healthcare sectors in the middle. Biotech sector started daily consolidation today. Really nice top fishing trade. Bearish entry. High of yesterday, 115.77, all-time high. Failed to break it by 50 cents, less than 0.5%. Resistance, rejection, and then significant pullback of multiple percent from that inability to see continuation. And I made that point in the live stream this afternoon. These names that are running like APT and all these small cap names, the biggest incentive for bulls to take profit and for bears to jump in on top fishing shorts is the inability to break the high of the previous day. So we've been running for 4 days, bulls in complete control. As soon as you fail to break the high of the previous day this morning, that's the quick sentiment shift and very convincing signal for short-term profit taking. SMH failed to break the high of 154.77, lost daily support of 149.52. Haven't looked at the 2-day time frame, just condensing it down. I like it. I like the 2-day time frames for clarity on all these sectors. High, low, lower high, and now we're scouting a higher low compared to 142.33. The only sector that we've just looked at that has broken this line in the sand daily level is XLF. Everybody else is holding it for now. The VIX. So the VIX had a big day today, big upper wick of profit taking as well. Is this our weekly high or low? So we're looking for a weekly high or low compared to 2350. The answer is one day isn't going to tell us that. We don't have enough information. Curious what the VIX looks like on the 2-day time frame. Low, high, higher low is set, and watching for the potential of a lower high compared to 44.40. And again, it's just doing the inverse for the most part of what we're looking at on other names and other sectors. This is why I like doing these daily videos. I did not know that I liked the clarity on all these sectors on the 2-day time frame way more than I like it on the daily time frame. And now I know that just by running through this and doing this analysis. So I am formulating things and plans in my own head as I'm doing this impromptu, freestyle, technical analysis. And that's the same thing with answering questions. That's why I love answering people's questions about technical analysis, because it requires me to dig deeper into my subconscious in terms of what I'm seeing than I otherwise would if I'm just sitting here in my own head and not interacting with anybody, which is why having a team is ideal. It gets you outside of your head. It makes you question things deeper, and that is useful. Gold, bearish reversal candle on the daily. 4-hour time frame, still holding the 12-period exponential support. So there's no major red flags right now. If we break the low of today, tomorrow, we're going to look for a daily higher low to form compared to 1712. Plenty of space for the bulls. Again, I just have not liked a bullish entry. And I think it's just the lack of volatility, to be honest. You know, the bull break was 1745. If I'm looking at GLD and the bull break happening at 164.08, maximum gains at this point is less than 2%. That just doesn't interest me. The other gold bull moves that we've seen on this breakout have been much more significant. And again, I've said this to members before, maybe I'm going to miss this move and I'm okay with that, but I'm just not itching to get in bullish metals right now. Silver, unable to break 1819. Support is down at 1731. That's still holding. Essentially what the bulls need to do is hold 1695 and break this resistance level of 1809 to convincingly change the daily trend. But a lot of previous price resistance still here from a couple weeks ago, whereas gold doesn't have that previous price resistance. Miners have already started their daily consolidation after the bearish doji yesterday, reason being the broader market weakness. So obviously miners are impacted by gold and the broader market, and the big drop in the S&P 500 today has started the daily consolidation in these miners before gold has started daily consolidation. So we are looking for a daily higher low, anything above 32.30. Bulls will have to change the hourly trend back in their favor for a daily higher low to try and be set. Oil pullback today. So again, all these assets are correlated. A little bit of consolidation, pullback on gold and silver, oil dropping, stocks dropping, cryptocurrency dropping, dollar going up. So we're seeing some funds leave assets and go back to the dollar. It's not in a significant rush, but that's worth noting. So for oil here, bearish candle yesterday, bearish reaction to the inventory report today. I'm watching for the potential of a head and shoulders. This is the left shoulder with 34.66 support. We headed to a higher high without significant follow through. Looking for 34.66 to hold, but if we bounce and fail to break the high, if I'm an aggressive bear, I'm scaling into a short using 41.63 as a stop level and hoping to roll over and lose the daily uptrend. We'll see how much pullback we get from here, but that's a potential setup looking bearish. Natural gas. Bears still strong, low, lower high. Held a double bottom here on the US dollar pairing, and just a couple little support levels left. And someone in the comments yesterday pointing out that the futures charts are already dropping to lower lows, and because UNG is trading off the futures chart, it's already dropping to lower lows. The bottom line is we know natural gas is extremely weak. The bears are in complete control. The bulls are proving nothing to us. Look at UNG. When's the last time UNG has closed over the daily 12-period exponential resistance? And your answer is 7 weeks ago. and you pair that with the fact that the spot price of natural gas has not closed over the weekly exponential resistance in months and months, we know the bears are in absolute complete control, and there's no sign of that changing right now. So let's do a trade review. So, like I said, wasn't on top of the bear move first thing this morning. So I patiently wait. And this is where experience is so invaluable. The number one factor for experience is patience. When you have when you've been on top of 1,000 plus moves and you have watched 1,000 plus moves pass you by, you have no rush to do anything. If I miss this dump, whatever, I'll trade tomorrow. I don't care at all. So I see the dump happen, and I say, all right, well, I'm going to wait for a risk to reward scenario that I like on this dump. I attempted to play one bounce on the S&P 500 here, and it was right here. I attempted this bounce, saw a weak bounce, exited half of my position, tiny profit to drop my risk significantly, and then was stopped out on a new low of the day. Tiny loss, no big deal, but I'm not going to keep trying for bounce after bounce after bounce after that tiny loss. So I patiently wait for a bear entry. We finally start bouncing. We see a little 5-minute trend change. As soon as we see this little 5-minute higher low and higher high, I zoom out and I look at the 15-minute chart and I say, all right, I'm looking for a 15-minute lower high. What do I like to use? Exponential moving averages. So as this bounce develops, I'm patiently watching, seeing if I can find a low risk, high reward scenario I like. And as we start to get extended, I say, okay, we haven't even changed the 15-minute trend yet. So I know we have to top out on this bounce soon. And looky here, we're hitting the exponential 12-period resistance. I love that moving average. I'm going to start scouting to see if I can time this 15-minute lower high. I'm not just going to guess on where the top's going to be. I'm going to watch the short-term time frame. So longer-term perspective, and this instance as a day trader, the 15-minute time frame is a longer-term perspective. Most likely scenario, 15-minute lower high to top out on this bounce, knowing even if the bulls are going to see bounce follow through, we have to change the 15-minute trend. So I zoom in from there. Say, okay, we're at 15-minute exponential resistance. Let's see if we can get a scenario that I like for the bears. So here's our bounce. And I say to myself, what is the indication of a 15-minute lower high being set? In general, it's a loss of the 2-minute uptrend. So I watch this pullback. I watch the bounce off 2-minute exponential support, which held the last bounce. I see an attempt to go back to the high of the day at 305.24. I say, okay, that's enough of a bounce. If we break that low of 304.91, I'm going bearish and I'm putting my stop loss above the high of the bounce. And if that's our 15-minute lower high, I nail a trade. And if it's not, and we see bounce continuation, it's a small loss. I'm risking 60 cents or so. So what I did is enter bearish. When that level broke, I actually jumped the gun slightly. I think my bearish entry was 304.97 as I saw that weak bounce and then momentum for the bears. So 304.97. And then we start pulling back. I look at the 5-minute time frame and I say, okay, well, the most likely scenario here is a 5-minute higher low because anything above 304.44 is a 5-minute higher low. So I know that 5-minute higher low is likely to come. So I want to take short-term profit very quickly to protect this trade. And knowing that I was going to take short-term profit very quickly, I took a bit of a bigger position than normal. So I entered bearish 304.97 and I covered half of my position at pretty much 304.77, 20-cent gain. 20-cent gain, that is not the win that I'm looking for. That's tiny. That's just protecting my trade. So instantly my break even goes from 304.97 to 305.17. I just dropped my risk considerably. My break even is higher and my position size is less. So if my half position size remaining gets stopped out, it's again, tiny loss, no big deal, whatever. So from there, I'm in half of the initial position with a break even of 304.17. I then see this bull move and say, this 2-minute time frame's a little bit extended headed to that resistance. And I entered bearish again, re-entering that half position, sold it 304.40, 304.70s, re-entered 305.30s, quick flip, sold it again, 12-cent gain. Tiny, right? That's not the win I'm looking for. That's protecting the rest of my position. So now my break even on the half is 304.29. Again, tiny risk, just shrinking that risk every time I do that. If I'm aggressive, I'm keeping that half again, keeping my stop over 305.50 and saying, all right, let's go. And that obviously would have worked out, but I'm in more of a conservative mindset as a trader this year, having already reached my goal for the year and just staying conservative. So I resold it again, half position, break even, 304.29, stop over 305.50. Let's see how it goes. Bears followed through very nicely. So that's my trade. From there, into the weakness, I exited a third of my position right around here. So a third of my position covered. And then into the end of the day, put my stop over 304.83. I was about to live stream, knew I couldn't watch. So remaining 2/3 of the half position, stop over 304.83. Solid win. Was it a home run? No. But I positioned myself for the possibility of a home run if the Bears dropped and broke 302.10 and if the weakness continued. So it's a solid win. Gave myself the possibility for a big win. And that's the trade. There was another one actually that I highlighted while I was live streaming this morning and I didn't take it. And it was Tesla looking for a bearish entry. So Tesla dumped. 5-minute bounce. Massive. Big bounce. But we know we're just looking for a 5-minute lower high on this bounce. We topped out at 982.97. We pulled back and we topped out at 983. And I was giving an example on the 1-minute time frame for that bearish entry and talking about a head and shoulders pattern where it was right here. So support on the 1 minute, 979.58. We hit 983 and I said, okay, we're looking for a 5-minute lower high. I know that's the most likely scenario. So how can I position myself in a trade that's very low risk for the potential of that 5-minute lower high being hit? So we then pulled back. We found a support level, and actually, I forget which exactly it was. It might have been here, it might have been here. But either way, it was holding the 1-minute support, failing to break the high, making a bearish entry. I was talking about potentially a bearish entry at 981, putting my stop over 983. I'm risking maybe $2.10. And then we ended up pulling back, which would have been a $7 pullback. So I'm risking 2 and change to make possibly 7. And even if you only make 5 or 4, that's a 2-to-1 risk to reward, which is nice. That's the minimum I try and go for. And if you missed that, we had a beautiful double top at 983, 982, 982. Just a very clear resistance zone where if you top fish these levels with very small risk, you get big reward on the bear follow through. I'm done talking. Have a good rest of your day. Do good things. Lots and lots of blackberries coming on. Squash are a bit wilty in the midday sun, but all winter squash on the right that are going to trellis down the hill, and the summer squash are on the left, they'll stay put. I forget the name of these tomatoes, but they're supposed to be all weird looking. A bunch of cherry tomato flowers. This one's got more flowers than I've ever seen on a tomato plant. These are microgreen sunflowers that I was eating and just stuck them and watered them every time I walked by. These are radishes that bolted, but I pretty much leave everything flowering for obvious reasons. So this is the winner. This sunflower popped up on its own, and that's one of the benefits of feeding squirrels excessive amounts of food, is they've been burying these sunflower seeds all over. And this is one that's just popped up, and it is over 8 feet tall, and it's just starting to put on a very nice flower. I saw a squirrel climbing it yesterday. I had to shoo him off. He was gonna snap it. I've never seen anything like this. These are all offshoot sunflowers. It's got 8 of those on the bottom. You can see the whole way up how many individual flowers are set to go off on this stalk.